All right, folks, let's go over some trends and apply my method. All right. I usually start at 8:30, so we'll start right there. Okay, first things first. Download more data. All right. So, as you probably know, the first thing you do is you take a look at the higher time frame, and again, the most basic thing, which is I believe is the right thing, is the trend analysis, support and resistance analysis. I mean, this is what people have been doing for literally 100 years. All right, this is nothing new. This is legit. Okay. All right. So we were here. Where I can't find. All right. So and you see it. The opportunities present themselves like clockwork. So you had this test here of the low bar, and this happens again and again. I'll show you here it happened, low bar, tap. Where else did it happen? Right here from the rally, the low bar tap, tap twice, two opportunities, tap and tap, and against the high bar. So let me draw it. This is the high bar. You got two opportunities, one here, another here. This is the low bar of the rally. So tap, tap. So I mean, you can see it very clearly, because most of the time markets are not breaking out every brick, right? Every bar. So they will go up and down and provide opportunities between support and resistance. All right, even within the consolidation. All right, so you have to know that, meaning after a rally, you should immediately know, your levels in terms of where it's going to pull back to, most likely, and just be ready. So after a rally happens, because a rally doesn't happen all the time, there's more consolidation than there is rally. There's more consolidation than there's breakout. There's more movement to support and resistance than there is breakout and breakdown. So these offer a lot of opportunity. Anyway, make a long story short, let's go to 8:30. Where was I? No. Never. Okay. You see here, the market pull back. Right there. There's the tap. There is the tap. What do you see? What do you see? What I see, and I'm ready for when it hits that low bar, is 1, climax, 2, change of behavior. Bingo. All right. It's not rocket science. Tapped it, and you have volume on the down wave, volume of the up wave. This is very important. This is the climax and the automatic rally that Wyckoff was talking about. What other folks are showing you with that labeling is in hindsight and cannot be quantified. They just do it based off of hindsight, and then they start labeling. What I'm showing you is quantified. Climax and that automatic rally or change of behavior, legit off of a support level. So typically you'll have this off of a support level or resistance level. It could be off of a spring or an upthrust. That's usually it. So you can see very clearly this two things back to back are the climax and the automatic rally. All right, so now the next question is, there's no confirmation here. It's just ding-donging, but have, that's why probably why the market didn't go up that much, but it offered you a nice opportunity against that brick, the 9 brick right here, which has the biggest volume in 15 bricks. It was holding support, support, support. When you have this behavior, it's setting up the springboard. If you take a look at Wyckoff's first study, right, in the New York Times, you had that climax, you had that automatic rally, and then he talks about first point when he talks about springboard, it's a bit elongated, and it has clustered closes and all of that. This is that behavior. You see that how elongated this is? This has that behavior. This qualifies for a springboard on this brick size or lower time frame. This is how it looks. Rally and then up, sideways consolidation and elongation, and then bang. All right, now, unfortunately, it didn't go up that high. Why didn't it go up that high? Because you have resistance there. What happens at resistance? Sellers will step in. All right, so how do you know they stepped in? Again, you have a lot of volume here. More importantly, a lot of price volume here with follow through to the downside. And you can see pressure, pressure, rally pressure, rally pressure. So you see over here, they kept buying, kept buying, but something's not quite right up here. So in the futures, it's just not right. Here, where is it? The money on the downside is coming in. So you have the money right there. That's money. You have market breadth right here. So 438 stocks, well over 26 million or 2.6 million, I don't know, whatever. So the 26 there, it's like selling. Right now, the question is, where is it going to pull back to? So what do? You just, first of all, at all times, you must know where you are in terms of support and resistance. Do not be like those folks who are just looking at patterns on a lower time frame, just looking at pattern recognition. That shit doesn't work. You must be able to gauge and quantify supply pressure and demand pressure at levels to confirm if buyers or sellers are stepping in, and with how much pressure, selling pressure or buying pressure. Here we see the markets at resistance and they're stepping in. Here we see it up thrusted, sold off, and basically offered the tap. You can see very clearly. So we're at here. Immediately you want to what is it called? Mark it as I forgot where it was. Anyway, it's resistance. It's pulled back to the high bar, so it should be right there. Pull back to the high bar. Selling pressure. Here it gets kind of confusing because now you're testing the low bar right here. So it's a little dangerous. So you don't really know what the hell is going to happen, because this is initial buying right here. See this? They're buying off of that support level. There's some support level. Then it springs that area, and off of that area in the low bar, which is a little bit lower, you have, I guess you could call this climactic. I really don't know what to call it, but something like that. I don't know. All right. So you have selling, selling, selling. Here, this is no doubt in my mind that this is buying right there. Right there. I can't even remove this circle. But this 23 with 392, You tell me, what do you think this is? Bang, pressure, pressure. Off of what? A spring. It's a minor spring, but the spring is right there. There is a spring against the low bar. Boom. Test. Buying pressure. And against this high volume brick. Tap. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Done. And it goes back into where? Resistance. From resistance, what are you getting? Supply pressure. And that's it. End of day. So what are some of the key points to know? First is, at all times, you have to know where you are on a higher time frame. Whatever higher time frame you use, you have to know where you are. So what do I mean by where you are is support and resistance levels. That's all. Support and resistance level include the high bar and low bar. They also include the test of creek and ice. Once you see that, you have to then take a look at the lower time frame and start, seeing if there's pressure coming in. Is there anything else you do? Of course there is. You do your trend lines or whatever. Let's see what the line is. Trend intact. You see it's clearly intact. That trend is intact. Delete. That trend is intact. You better watch out. There is your trend. It's intact. You're having springs here. Spring here. And it's consolidating pretty good. So it's no brainer that it's going to attempt. All right. Anyway, so where are the trades? Right here, you had your climax, change of behavior, or automatic rally, your springboard, and whatever. Then again, you had your climax, you had your change of behavior, and it went down. When it goes into the spring, what do you have? Oh Lord, it's climax, change of behavior. But what makes you confident about them is, 1, a higher time frame support and resistance level. 2, pressure, meaning other stocks are moving. 3, the money's coming in. So, I'm very confident because, see the money here come in, selling pressure off of resistance and buying pressure off of support. Right, in the big wave, right? I don't know why it doesn't go up. Anyway, you can see, I don't know, these platforms. Anyway, over here you see selling pressure, ding, 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 buying pressure right there. Over here it's very clear. But the moves are not big. Why? Because it's a range bound. Range bound, you got to know how to trade that. From support to resistance. From resistance to support. From support to resistance. And you can always, like I've explained before, you draw the trend lines. It's not really that. See, if you draw it, you see it clearly broke with the change of behavior. All right, if I draw it here, to some degree, I could say it broke with the change of behavior. It would be better if it broke a little bit higher, you know. Again, broke. These are tools of trade, and I'm not looking for just trendline breaks. I'm looking for high price volume breaks. Boom, here, boom, here, boom, here. Even I don't think this one was it. Let's see. Yeah, this one broke here, but it didn't give much of a move. This one broke. Anyway. All right, so this is all right, that's all folks. Thanks. Bye.